holy smokes, everyone. It just happened. I've been warning time and time again that the banking crisis we witnessed in March was far from over, and that was just a tip of the iceberg. And guess what, people? We just got new news that another bank has just failed. A lot of the mainstream media did not want to cover this because they know if they do cover this, more of you are going to become aware of how fragile, how weak the banking system is, because I'm sure some of you may know, but a lot of people still don't know that a lot of banks may only have 5 or 10% of cash reserves, or not even cash, just digital money reserves, digital dollar reserves in their banks. And if just 5 or 10% of their customers tried to withdraw their money, the bank would collapse overnight. So everyone, we got so much more news, so much more data to show you that the banking crisis looks like it's about to start again, and why you need to be prepared now more than ever. And I'll tell you towards the end of the video how you can prepare, how you can protect yourselves from this banking crisis and even profit from it. So everyone, without further ado, you know what time it is. Let's get straight into the news, the facts, and the data. So look at this, everyone. Don't do what they say, or don't listen to what they say. Look at what they do, and follow the money as they say. So Russell 2000 and regional banks slammed as yields and crude rebound. Now, for those that don't know, the reason why the banks failed early this year in March was because they brought a lot of bonds, okay? They brought a lot of government bonds and mortgage-backed securities, corporate bonds, commercial mortgage-backed securities, and they brought those when these bonds were at record prices and the yields were pretty much at 1 or 2%. Now, what happens is when they go ahead, or when governments or banks issue new securities that are now paying 5, 6, 7%, all those other bonds that are paying just 1 or 2%, they lose value. Now, a lot of the banks had a lot of those bonds on their balance sheets, so they lost huge amounts of money. Now, normally that's okay. They'll just put it to another balance sheet, what's called hold to maturity, where they cover up the losses. It's a very creative accounting scheme that they use. But what happened is a lot of people started to withdraw their money because they're saying, look, you're not paying us any interest. We're going to put our money in a money market fund or elsewhere in the markets, gold, silver. And because they had so much losses on those bonds and mortgage-backed securities, they had to sell them for huge losses. And unfortunately, it wasn't enough because, like I said, they have maybe 10, 15% at most of reserves. But what have we seen lately? We saw the 10-year US Treasury hit 5%. And I don't think it was a coincidence when the Federal Reserve came out and they pretty much did effectively 2 rate cuts. The 10-year went from 5% to 4.5%. That's like the Federal Reserve cutting interest rates by 50 basis points, because the Federal Reserve came out and said, look, inflation is over. There's no inflation anymore. Everything's fine. The economy is fine, and we don't need to do any more rate increase. In fact, a lot of people are saying that they may cut early 2024. I'll tell you what that means for the markets in a moment. And so what they effectively did was bail out the bond market. Not really bail out, but they helped the bond market, because if yields went over 5%, we would see a lot of these bonds on these banks' balance sheets crash even more, and more bank failures, which we just got news that happened. Now, even the Fed themselves is admitting this. Look, the US banking system is still vulnerable, New York Fed blog says. Sector is less vulnerable than it was ahead of 2008 crisis, but we'll have to see. But losses in securities portfolio risk weakening capital levels. So that is exactly right. So what bank failed today? Well, look at this. Citizens Bank closure marks the fifth bank failure this year, and people, I don't think it's over. And we can go into the official announcement from the Federal Reserve themselves. I'll go ahead and adjust this article so you can read along with me here. So on the 3rd of November, Citizens Bank, Sac City, Iowa, was closed by Iowa Division of Banking. The Federal Deposit Insurance Corporation, FDIC, was then appointed receiver. To protect depositors, the FDIC entered into a purchase and assumption agreement with Iowa Trust and Savings Bank. So it is official, everyone. More banks are failing. Now, you may think, well, this is only smaller banks failing. Well, no, it's not smaller banks, and some of the big banks are in big trouble. So look at this. I'll go ahead and adjust this to make it a bit bigger, easier for you guys to read. Citigroup considers deep job cuts for CEO Jane Fraser overhaul called Project Bora Bora. So Citigroup is in big trouble as well. So managing Ventures and consultants working on Citigroup CEO James Fraser's reorganization have discussed job cuts of at least 10% in several major businesses, according to sources. So what will happen? Well, executives will see cuts beyond 10% because of Fraser's push to eliminate regional managers, co-heads, and others with overlapping responsibilities, they said. So the reason why they're cutting, because they're facing huge losses as well. So the corporate overhaul, known internally as Project Bora Bora, has employees on edge. The talks are early and numbers may shift in the coming weeks. So Citigroup, they're in trouble, but I'm sure you're wanting to know about the big four. Well, look at this next story, everyone. So 40 billion in unrealized losses hits JP Morgan Chase as Bank of America, Wells Fargo, and Citigroup face exodus to US Treasury. So that is exactly right, everyone. Everyone's pulling their money out of the bank. They don't trust the banks. They can get better returns elsewhere. And so all these banks that are too big to fail, well, they're going to face some real issues. And like I've covered extensively, Bank of America has well over $100 billion in unrealized losses. So, unlike the mainstream media saying the banking crisis isn't over, in fact, I think it's about to get much worse. So you need to do this right now. You need to listen and pay attention right now, everyone. Your money is not safe in the bank. Now, what is some way to protect yourself? Well, you can become your own bank. You can have gold and silver and Bitcoin as well, self-custody it, but gold is the most safest out of all the precious metals. It is known as a safe haven. You can self-custody, you can hold it in your real hand. Unlike all money where what could happen overnight is the US government, the Federal Reserve, could announce, you know what, $100 note, they're no longer legal tender. We've seen this happen in countries like India where they have certain notes and they say, look, they're trying to fight the black market, crime, etc. We're going to make these notes no longer legal tender. Now, is that likely? Well, I think it's becoming more and more likely, but I think what's even more likely is a central bank digital currency. And you won't be able to hold money ever again. It will just be all digits on a screen. And if you say or do anything wrong, have the wrong political opinion, your account could be shut offline. So you definitely want to have some gold and silver. Now, when things really hit the fan, I think gold and silver will skyrocket. But what has a much more potential, a play you can do as well, is like I keep talking on about, is mining companies. Because when gold, silver goes up, when commodities go up, whatever mining company that is mining that mineral that is a good project tends to outperform most commodities. Now, it's not guaranteed. Past performance, no guarantee future performance, but this is a way to get big returns. And do you know what company I think next that has huge potential? Well, that's today's video sponsor, Western Stars Resources. That's stock ticker symbol WSR. So who is Western Star Resources Inc.? What do they do and why am I bullish on them? Well, in the heart of British Columbia, Western Star Resources emerges as a paradigm of growth and meticulous exploration within the mining industry. Western Star's portfolio, comprising significant claims in the Revelstoke mining division, is underpinned by an unwavering objective to amplify shareholder value through intelligent exploration and development of its property. Strategically located and accessible from the skies, their properties are not just parcels of land, but a canvas of potential waiting for the right vision to unearth its wealth. Guiding this vision is CEO Blake Morgan, a leader whose belief in the company is palpable. Demonstrating his confidence, Blake has been actively investing in the company, consistently buying shares in the open market, and such insider buying is a powerful vote of confidence in Western Star's future. And they just had some big news. So on October 18th, 2023, Western Star Resources took a leap forward, securing the Mount Anderson property in Yukon. The property is not just an asset, but a geopolitical marvel, with samples boasting extraordinary gold and silver grade. This property, ready for drill exploration, is flanked by a renowned geological formation. Its historical prospects bring with mineralized zones offering a canvas for discovery. So neighboring this new acquisition at their Yukon property is New Pacific Metals, a company valued at $350 million, underscoring the immense potential that Western Star, with a modest $2 million valuation, has to grow. So you're looking at, if it just goes to 10% of this market cap, we could easily see growth, not saying it's guaranteed, but it has potential of 10, 15x. With this strategic acquisition of Mount Anderson property, Western Star has issued 1 million common shares, ensuring an invested interest in the property's yield with a 1% NSR royalty. Meanwhile, CEO Blake Morgan's consistent share purchases signal strong insider belief in the company's valuation and trajectory. Underpinning Western Star's ambition is Senergy Capital, substantial equity drawdown facility, infusing $5 million into the company's exploratory and development programs, including their maiden drilling initiative. Senergy's expertise is poised to steer Western Star through the complexities of corporate growth, mergers, and strategic investments, setting the stage for a narrative of prosperity and exploration. So with its strategic location, insider confidence, and financial backing to forge ahead, Western Star Resources, again that stock ticker symbol WSR, is poised for huge growth. So it's definitely something you want to keep on your radar, and thanks for Western Star Resources for sponsoring this video. So again, everyone, like I said, the banks is not safe. You definitely want to double check how your bank is doing with the money you keep in your bank. You want to diversify your bank accounts. Don't keep all money in one bank account. But what do you all think about this? Let me know down below. You're awesome. I'll see you all in the next video.